Hi, and thank you for joining us here at Tax Talk UK, where we talk about all things tax and other important aspects of working for yourself, running a small business. So we've been asked to talk a little bit about reconciling and what this term means. So that's what I'm going to talk about today. Before I do, if I could please ask you to take a moment to subscribe to our YouTube channel. That way you'll easily be able to refer back to this information if you require, as well as being able to find information that we have available on a whole wide range of topics, all aimed at supporting you in your self-employment, all organised on our channel under our playlist. So if you go to our playlist, find the situation that describes you, and in there you will hopefully find lots of information to help you on your way. So reconciling, a couple of people have asked, what does this actually mean? Because of course we do refer to this quite often when we're talking about accounts. So it's quite simple. So reconciling is just saying that, well, this is say, for example, our accounts version of our bank account. This is our bank statement of our bank account. Obviously, the bank statement of the bank account is the actual version of what has happened. So do our accounts reflect, do they reconcile with the bank statement? So that's what we're talking about. We're just talking about checking to an official factual source of data to be able to double check that we haven't missed anything in our accounts and that everything is as it seems. So of course bank statements are a common thing, and we will all be reconciling our bank statements to check that what's happened is in the accounts, because of course it's very easy to miss something, and this means that you will therefore pick it up. Of course, these days, if you're using Making Tax digital software, there's a good chance you will have your bank statement connected to your software. So you will then have what we refer to as a bank feed, where the bank literally feeds the transactions into your software. It still is important to reconcile to the statement, and your software will have a function that allows you to do that. So please do make sure that you do know how that function works, because as with everything technical, digital, it's not infallible. Errors do happen and blips do happen. So for example, much as the bank feeds over the past couple of years have become a whole load more reliable, there is some sort of times where there perhaps is a blip in the system, and a day's transactions don't get fed through. So it's really important that you just do reconcile still to the bank statement to make sure that it's completely correct. As I say, your software will have a function that enables you to do that. But in the prior to Making Tax digital software, of course, if you were using software or manually collating your accounts, you would go through all of the transactions. You would then have either in some desktop software or a spreadsheet, or perhaps even a handwritten book, a list of all the transactions that you have recorded as going through the bank account, and then you would get your bank statement and you would check them all off, and then you would work out what was missing or what wasn't quite right. So the Making Tax digital does make that a lot easier, because it's turning it around, it's importing the bank, and it's saying these are the bank transactions, tell me what they're for. But as I say, it's still important to verify that the statement on that has been imported is accurate. So other things that we may reconcile are our debtor accounts or our creditor accounts. So for example, if you buy things on credit and have accounts with your suppliers, or if you extend credit to your customers, and they have accounts with you, obviously you will have a list in your accounts of what you think you owe to your suppliers, and they will likely send you regular statements. So when you get those statements, take a second to check that they are reflective of what's in your software. This way you might realize, oh, I haven't got that invoice in there. And I mean, that could be, if you're VAT registered, more VAT to reclaim that could get overlooked or expense, even if you're not VAT registered. So it's really important to just check that, so you know that your accounts are accurate. So other things that we may reconcile is what we call contra accounts if you're using Making Tax digital software, for example. Every time you do a transaction, if you are VAT registered, for example, it will add the VAT to your VAT account, and when you reclaim it, it will deduct it from your VAT account. And when you submit your VAT return to HMRC and pay what's due, and then that will of course reduce because you've paid the liability. So you should always be checking in the accounts, if you're VAT registered, that the VAT liability per the accounts is correct, and that there's nothing sort of funny that's happened in there, no sort of blips in the system. If you do standard accounting and it's very straightforward what you do, you would in theory find that you invoice your customers, and then you pay your purchases, and those transactions will make up your VAT return. And once you've submitted your VAT return and made the payment, that it would in a theory be zero. So that's what we're aiming to check, whatever the balance, because obviously we live in a more complex world, of course, where that doesn't actually necessarily happen. So whatever the balance is, we need to check, oh yes, because those transactions have happened after the end of the VAT quarter, or before I made the payment. So again, your software should have a function to help you to check that all is okay. If you employ staff, you will have the contra accounts where you post from the payroll what's due to be paid to the staff, what's due to be paid to HMRC, what's due to be paid to your pension provider that you use if applicable. And again, these should be holding accounts on the balance sheet of your accounts, where you have the liability sits and then the payment comes and clears it down to zero. But again, if for example you have weekly paid staff and you only put your journals on monthly, if you still have separate software for your payroll, then again you just need to check that if it's not going to zero, you understand why it's not going to zero. And this will all help to make sure your accounts are the most accurate. So that is effectively what we're talking about when we say reconciling, whatever we're talking about, whether it be banks, suppliers, contra accounts. We're talking about taking a factual source of information and checking that your accounts do reflect that same information. So hopefully this helps to give you an overview understanding of what we mean when we're talking about reconciling, and also why it's important. And of course, if this side of things is a little over your head and you don't really understand it, then it could be that you should be engaging a professional to help you in your accounts to make sure that everything is accurate. And of course, as we always say, if you are engaging professional support, please do make sure that the person you're engaging is fully qualified to do whatever it is you're engaging them to, that they're a member of a professional body if required, and have professional indemnity insurance. So hopefully that this helps. As I mentioned earlier, please do take a moment to subscribe to our YouTube channel. Thank you very much for watching. Goodbye.